Sugar is an agricultural product that powers our lives in more ways than one. The sweet commodity is a critical ingredient in many foods and is also required for biofuel production. Sugar comes from two sources: sugarcane that grows in tropical climates and sugar beets from colder regions. The leading producer and exporter of sugarcane is Brazil, and the Russian Federation leads the world in sugar beet production. France, the United States, and Germany are also substantial sugar beet producing countries. As fuel for the body and a primary ingredient in ethanol in Brazil, sugar is a bellwether commodity that trades in the futures market on the Intercontinental Exchange, ICE. The price has a long and volatile history. Since 1968, sugar futures have traded as low as 1.78 cents and as high as 66.0 cents per pound. Heading into 2022, sugar's trend is bullish, but events in Brazil and the price action in the energy markets will determine the path of least resistance for prices during the coming year. Sugar prices moved higher in 2021. The world sugar futures price closed at 15.49 cents on December 31, 2020. ICE sugar futures rose to a high of 20.69 cents per pound in November 2021, the highest price since February 2017. On December 27, the price was sitting at the 19.23 cents level, closer to the 2021 high than the low. Sugar futures gained 24.1% in 2021, with less than 1 week to go before 2022. Sugar is a political commodity as governments subsidize production. Food and fuel are staples for people worldwide. As governments provide citizens with essentials, sugar is a political commodity. Many countries subsidize sugar producers to ensure ample supplies. Subsidies tend to distort prices as they interfere with the fundamental supply-demand equation. The EU, US, and other countries have strict import and export rules and provide aid to sugar producers to encourage output. While the price of nearby free market world sugar futures was trading at the 19.23 cents per pound level on December 27, the US domestic price was far higher. The chart of US domestic subsidized sugar number 16 futures stood at 36.20 cents per pound on December 23, an over 88% premium to the world free market price. Sugar's path looks similar to 2008 to 2011. The price action in the world sugar futures arena since the March 2020 low looks a lot like it did back during the period from 2008 to 2011. Free market sugar futures rose from a 2008 low of 9.44 cents during the height of selling during the global financial crisis to a high of 36.08 cents in 2012. The 2008 global financial crisis caused central banks and governments to use monetary and fiscal policy tools to stabilize the world economy. While the 2020 pandemic was a far different crisis, the central bank and government tools were the same. The only difference was that the tidal wave of central bank liquidity and tsunami of government stimulus in 2020 was far greater than in 2008. In both cases, the monetary and fiscal policies led to inflationary pressures. The most recent Consumer Price Index data revealed that U.S. inflation was running at its highest level in nearly 4 decades, which is bullish for all commodity prices, including sugar. Moreover, in July, a frost in Brazil pushed prices to over 20 cents per pound for the first time since early 2017. If the price action from 2008 to 2011 is a model for the sugar market, we should expect a continuation of higher lows and higher highs in 2022 and beyond. Technical resistance is at the October 2016 23.90 high. Brazil impacts sugar prices. 3 factors will cause events in Brazil to influence sugar prices in 2022 and the following years. The exchange rate between the Brazilian real and US dollar could cause sugar prices to move higher or lower. A strong real increases production costs as sugar is labor intensive. A weak real has the opposite effect as it makes production less costly. Political and economic mayhem has caused a bear market in Brazil's currency against the US dollar for more than a decade. However, Rising commodity prices are not bearish for the Brazilian real as it increases tax receipts and corporate profits. The secular bull market in commodities could eventually lift the real. President Bolsonaro is up for re-election in 2022. Brazil has suffered from COVID-19 more than many other countries as it is third in infections behind the US and India and second only to the US in fatalities. The pandemic could cost the sitting president his job in a highly contentious election, which could impact the real's value in 2022. The Brazilian weather is the most important factor for sugar supplies. The 2021 frost lifted coffee futures prices, another soft commodity where Brazil leads in production and exports, to the highest price level in a decade. Events in Brazil will be the primary factors for the sugar price in the coming year. Crude oil and gasoline prices are critical factors for the sweet commodity's path of least resistance. In the US, the world's leading producer and exporter of corn, the coarse grain is the primary ingredient in ethanol production. In Brazil, biofuel comes from sugarcane. Many Brazilian cars run on sugar-based ethanol, so crude oil and gasoline prices will influence domestic sugar demand. Rising oil and gas prices will put upward pressure on sugar's price as consumption could increase, limiting the sugar available for exports. NYMEX crude oil futures have been trending higher since March 2020. In 2021, the energy commodity reached its highest level since 2014. NYMEX gasoline prices, a crude oil product, also moved to the highest price since 2014 in 2021. In 2014, crude oil was above the $100 per barrel level and gasoline was above $3 per gallon wholesale. A continuation of the bullish trend in 2022 would put upward pressure on sugar's supply-demand equation. Moreover, as the world addresses climate change, ethanol demand is likely to rise. Inflationary pressures pushed all commodity prices higher in 2021, and sugar was no exception. Keep an eye on events in Brazil, traditional energy and biofuel prices for clues about sugar's price path in 2022. The trend is always your best friend in markets across all asset classes. With sugar trading closer to the 2021 high than low, the path of least resistance remains higher for the sweet commodity at the end of this year.